If you're looking for a business that you can start on your own, generate over 6 figures in annual revenue, and a profit in your first year, then starting a carpet cleaning business, a residential or commercial carpet cleaning business, might be exactly what you're looking for. We have done a lot of research, and what we found is that for a startup cost between $30,000 and $80,000, you should be able to generate over $100,000 in annual revenue even in the first year, and generate a profit in the first year on your own as a carpet cleaning business owner. We're going to go through a financial projection template and show you exactly how to enter in your startup costs, your ongoing operating expenses, your sales projections, and ultimately see how profitable a carpet cleaning business could be for you. My name is Adam Huxema. I'm the co-founder of Projection Hub, and we've helped thousands of entrepreneurs create financial projections as they're trying to get funding from investors or lenders at the bank, or just for internal planning. And in this video, we're going to focus very specifically on our carpet cleaning financial projection template. Let's dive in. Breaking something in the template. So I'm going to walk you through the entering in your startup costs, your funding sources, your operating expenses, your revenue projections, and then ultimately we'll be able to see a number of graphs and charts and tables to show your projected profitability. So here, what we want to do is enter in the projection start month. We're going to enter in any personal investment that you expect to make into the business. And now if you're getting a loan, if you're going to try to apply for a loan to start the business, you're probably going to have to put some money in yourself. And so we're expecting here a $10,000 personal investment. We have this starting in month 0. So put 0 if that's going to be kind of your startup investment. And now down here in this table in the fixed asset section, we enter in specific assets like a van that you're going to probably need for your equipment, also the carpet cleaning equipment itself, as well as a computer. And of course, the prices can vary on whether you're buying used or new and how much equipment and the size and all that sort of thing. But we've put in some default assumptions here for equipment expenses. And then down here we have a loan. We're assuming a $50,000 loan that is going to help you buy that startup equipment, as well as just provide some initial working capital as you get started. Jumping into our revenue projections. So the way we build most of our models is we assume that you do some advertising to find new leads for the business. So we're assuming that you're spending $500 a month in advertising and that it costs $100 to attract one new client. Now, this can vary depending on your competition, how good you are at advertising and marketing, how effective your advertising is, and a number of other things. But it's a starting point assumption for you here. So based on that, we're assuming you can get 5 new first-time clients per month from that advertising spend, and then we're assuming two new clients per month from just word of mouth. So customers had a good experience and they're sharing with maybe their neighbor or another business owner in that method. So that gives us our total number of first-time clients at 7. And we're saying that 75% of those first-time clients are going to become regular clients. And so down here, we'll calculate how many regular active clients you have. And then this table down here, you're going to put in your different services. So what I have entered here is kind of a mix of residential and commercial carpet cleaning. So we've got small and large residential cleaning and small and large commercial cleaning. We're saying that 5% of your active customer base are going to need a small residential clean every single month. So basically, that's another way to say that your active customer base is not going to have you come and clean their carpets every single month. And so we put in 5% here, and that would be, assuming that basically every couple of years your customer base is going to have you come back and do a carpet cleaning. And that's for on the residential side. Now on the commercial side, you may have a more regular rotation where you're coming back more often, perhaps even every month. But since we're assuming that probably you'll have less number of customers that are commercial, we still want to keep this relatively low at a 10% of your regular client base would be using you for commercial cleaning each month. Now here we're going to put in the first time client, so that when someone just becomes a client, what kind of client are they? And so we're saying 50% are just small residential cleaning jobs, 25% are large residential cleaning jobs, and then the final 25% are split between small and large commercial cleaning jobs. And we have some prices in for those different services and a cost of labor and cost of materials here. So what you'll see, what I did, if you look up here in the equation section of the spreadsheet, it's taking the revenue, the $75 for the service, multiplying by 35%. And we're saying that is the cost of labor for providing the service as 35%. So, if this is just you get to keep that labor, right? You get to keep that labor cost yourself. If you're hiring help or you're hiring someone to do the cleaning, then that 35%, that's a good estimate for what you're going to have to pay, a technician to go out and provide the service. So we have 35% of revenue for labor. And then we did the same thing for materials. So this would be the cleaning agents and materials at 5% of revenue. And then based on that, we're going to be able to calculate our projected revenue and our projected cost of goods sold. You have the ability to add in here any other types of revenue. So if you have kind of special one-off services that you would do, you could add those in here. And then jumping into our other operating expenses, we put in some default normal business expenses here, like accounting, computer services, credit card fees. One thing I'll mention on credit card fees, and you'll need to notice here, is that this is a drop-down cell, and you can either pick whether the expense is a fixed dollar amount or whether it is a percentage of revenue. And so for the credit card fees, we've set this up as a percentage of total revenue, and we entered in 0.02, so 2% of your total revenue we expect to spend on credit card fees and payment processing fees for your customers. Now, your credit card company might charge you more than 2%, but some of your customers might pay you in cash. So that's why we're at 2%, because we're assuming, some transactions will have no fees, some will have maybe 3% fees, and so we're averaging out at 2. We have insurance, professional services. This could be legal fees or designers or tax accountants, that sort of thing. And then fuel to get to and from your different jobs. So we're assuming 3% of revenue. You have some office supplies and some utilities, and maybe internet costs if you have a home office. If you have an actual office outside of your home, you need to add in rent for that office here as well. And then jumping into the salaries and owner draw tab. So what we've done here is we've said we're going to add an additional cleaner with a $40,000 salary. And actually, I should take that back, because what we've done here, the way this is set up, you have this cost of labor. Remember, we said 35% of the revenue is going to labor costs. So really, if we add an additional cleaner here as a salaried position, we're kind of double counting the labor cost. So what would probably be better would be to say, an office manager, because an office manager would not be built into the labor cost. Let's say we have a part-time office manager, just to help set up appointments and do paperwork and that sort of thing. But we probably don't, in the early years, you're probably going to do that yourself. And so what I have here is I have this office manager starting in month 37, or the beginning of the fourth year, really, of your projections. And so you can pick the start month here and the end month. And now based on that, we can go to our at a glance tab and we can see based on those assumptions, what do we look like? So the first year, starting out kind of slow, you're building up your customer base, 54,000 annual revenue with a small net income, so you just break even. But by year 2, you're into the 6-figure revenue level with a net income of over 30,000. And you can see how that grows over the years based on the assumptions that we have in here. So, of course, you need to do your own research, make sure that you have that the assumptions are going to work for your specific business plan and location and the pricing in your area and all that sort of thing. But hopefully this template is going to be really helpful to then allow you to make your own set of projections and be helpful as you're trying to potentially get funding from a bank or maybe an investor to help with the startup cost. So again, the template, we've linked to the template, our cleaning template in the description of the video below. And so you can go grab it there. And if you have any questions, please don't hesitate to comment in the video below or reach out to us at support@projectionhub.com and we'd be happy to help. Thanks.